Hey, welcome back. It's Hima here, and I've got Chart of the Week, VIX at Key Juncture. Today's Tuesday, February 16th, 2021. Before we take a look at the charts, important reminder that trading and investing can be extremely risky business. Therefore, it's your responsibility to evaluate any information, opinion, advice, or other content contained in this video. So here we have a daily chart of the VIX. So that is ticker VIX.X. And that is the CBOE Volatility Index. So this is essentially measuring how much fear there is in the markets. When it's high, the broad markets like the S&P and the Dow and the NASDAQ are usually falling. And when the VIX is low, like it is now, the broad markets are usually rising. Now here's the thing. If you only look at the VIX when it's really sharply moving in one direction or another, when it's really like sexy and fun to look at, that will help you only in part. If you look at it when it's in these quiet but very important junctures like it is now, it will get you ready for a couple things. So the first is that by looking at the current down move in the VIX, so take your eyes all the way to the right here, you can see that right now it's pushed lower, and the past couple days are all hanging out within one particular price range, the February 10th range. Also, the current action of the VIX is hanging out at two old key levels, the January 31st old high from 2020, meaning we've made a full complete circle here over a year on volatility. And this is also coinciding with a key level that I measure off the gaps. So both of those together, which I'll draw right now, are creating an area where the VIX is sort of encountering a floor, if you will. And again, the opposite action is what we expect in the broad market. So if the VIX continues to stabilize here, where it is, and then start to move higher, well, then that would be a sign for the broader market of a pullback and a fall lower. Now, if you are long any positions in the broad market, monitoring the VIX this way can help you protect your profits because it will give you an earlier indication of when the price action and the momentum and the key timing might start to become bearish and help you secure any profits you've accumulated along the way in the latest bull run-up. All right, another point, I just mentioned that word timing. It's really important to know that just like I train my tribe, my trading tribe, how to use my simplest forecasting tools on the broad markets, the commodities, Forex, tech stocks, and more, you can use forecasting on the VIX too. So I want to bring your attention back to these three data points, these three little X marks the spot. This forecast right here was for the VIX to form a high at 41.18 on September 3rd. And what actually happened is we got to 38.28 on September 4th. Pretty awesome, right? That you can get within a day of predicting when the VIX will make a high. Same thing happened out here. This was a forecast for the VIX to make a high on November 4th at 42.03. The peak actually came in a few days early on October 29th at 41.16. The next forecast after that was for the VIX to make a high on December 18th at 36.64. The price fell shy at 31.46 and was just a day later, trading day wise, on December 21st. And then the cycles that were underlying that latest forecast here got extended out. And you can see that the actual price part of the forecast, because a forecast consists of both price and time, was in fact met on January 27th and again on January 29th. And that was the biggest clue that the broad markets might resume higher. Where price stands now, depending on whether it moves higher or lower above this February 10th range, is when I can create my next forecast and when my trading tribe, who knows my same forecasting techniques, would be able to do the same. So you can draw a forecast when the price action sets you up to be able to recognize particular cycle action and make the projections. But I'm showing you right now that this is a very important time here. This February 10th range is vital to whether the VIX continues to fall lower, allowing the broad market to continue to grind higher, or if we start to see the VIX turn around to the upside. Now, if that latter scenario happens and this support at 20.11 and 19.99 actually holds on the VIX, where might the VIX go if it gets above February 10th? And again, it has to get above the February 10th bar range to do this next thing. Well, here's my expectation. Based off initial actual candlestick analysis, not yet a forecast, I would expect there to be a grind higher towards 29.24. Again, if and only if the VIX gets above the February 10th bar range. If that break above the February 10th range occurs, I would also likely be able to draw a forecast that would give me a time expectation of when the chart might get back towards the 29.24. So this is where we are in the VIX. It's a very important point, again, for making sure you capture the most profit on any long position, making sure you're ready to stand back if the uptrend in the broad market starts to wane or lose power or lose steam. And then potentially, depending on the risk reward, depending on your market approach, whether you're a trend trader or a scalper or something in between, being able to take advantage of any downside in the broad market that might occur if the VIX moves up. So, really important to keep an eye on this range. February 10th is key, and I'll catch you next time. You can sign up at the link to get my hot, timely, actionable updates as soon as I publish right to your inbox.